Okay, we have our speaker today, Mr. Ian Schnoor, who is the founder, the Maki Group, which have been acquired by TTS in March 2023. Ian also the writer for practical skill module, the financial modeling part in CFA level 1, one of the option. He's also the finance lecturer, Queen's University, recipient of Professor of the Year Award. Time and space is yours, Ian.
That's very kind of you, Ramat. Can you hear me okay?
Yes, loud and clear.
Amazing. I was watching your slides. I was watching your video as you started. You did some really amazing events this year and last year, it looks like. So congratulations from the society. I love to join you in person for some of them. And did you have Steve Balaban in yesterday, I think?
For webinar, yeah, just the
He's
day
uh
before.
he's another fellow Canadian like me. So I know Steve. So look at that.
He's coming in November, 4th of November to 27 November to Jakarta.
Wow.
They have
I will
been
have
coming to Indonesia for the past 3 years. He want to visit Medan and Yogyakarta this year. So I'm taking him
amazing.
around.
Oh wow. Well, I'm gonna have
So
to.
if you
I
can
should
come also,
I should join him. I should
yeah.
join him. Ha.
I
Anyway,
think he plan to split his visit. Usually he visit in November, but next year you want to split it into first half and second half. So if you
amazing.
can coordinate with him, yeah,
I will
sure.
do that. I'm going to send him a note. David, remind me I should catch up. And listen, it's really great to be here. I'm going to get started. I'm going to share my screen here, and I'm going to let me get started and share my screen, and we're just about ready to go. So first of all, I'm really excited and looking forward to being here. Ramat, I want to thank you and CFA Society Indonesia for having me in. By the way, I am looking right now at a very big screen. I've got a big screen over here. I can see all of you. Another screen, I see all your names and I can see a screen with all of you and the chat. And by the way, the chat remote is enabled. The chat is working, I assume.
Yes, it's working.
Okay, perfect. So let's get started. First of all, I'm Ian Schnoor, Executive Director of Financial Modeling Institute. I'm here with one of my colleagues, David, and I'll ask David to say hello in just a moment. But I always like to start. So I think I've done webinars. We've run webinars maybe for 50 CFA societies around the world. And this is the first time we're doing one for CFA Society Indonesia. So I'm very pleased to be here. Thank you for having us in. I always like to start and find out where exactly you are. I'd love it if you will. You're going to find out that I like to keep these webinar interactive. I'm going to ask you to be chatting with me and typing and raising your hand. I'd like you to stay interactive. So I'd like to know exactly if you're in Indonesia, let me know exactly where you are. Yeah, we've got Bandung, we've got Jakarta, where else? I'm sure there might be some people outside of the country. Let us know exactly where you are. I love that. Jakarta. Okay, we've got some people throughout the country. Great. Great. That tells me you can hear me okay. We're going to get started in just a second. And I'll do an intro, but maybe I will ask my colleague David to say hello. And I'd like to ask David to introduce himself first, and then I'll get into our webinar. So David, do you want to say hello?
Yeah, of course, Ian. Thank you for the short introduction. My name's David Moniz. I'm Partner Relations Manager here at Financial Modeling Institute. Really happy everyone could be a part of this meeting. I know you're going to learn a lot of great tips from Ian himself. And yeah, just looking forward to the session.
Amazing. And I'm just looking at, thanks, David. I'm looking at where everyone is coming from. It looks like so far everyone is in somewhere in Indonesia. We've got someone in West Java. But if you're from somewhere else, let us know. But I want to make sure you can hear. There's a lot of people here, which is great. And we're here to talk about some financial modeling ideas. And part of the reason why I wanted you to get into the chat is if you have questions, just toss them in. If you have comments or questions, please feel free to type them into the chat. I love it when people stay active and engaged during the webinar. Now, very, very quickly, let me tell you a little bit about me and about the webinar. By the way, this webinar is going to go for an hour. I have another webinar in Europe that I got booked for in 1 hour. But David, if there's questions, David is happy to stick around and take questions if you have more questions for him on modeling. David also has his AFM. David has his accreditation. He achieved his accreditation, so he is an excellent modeler and is happy to continue chatting if you guys have a lot of questions. Okay, great. Well, you can see my screen. So we're going to talk about sort of an introduction to financial modeling, or as I like to call it, financial modeling best practices here today. I want to share with you a whole bunch of ideas and skills as we get started. By the way, how many of you, can you raise your thumbs or your hands? How many of you spend a lot of time working in spreadsheets, in Excel? How many of you work a lot in spreadsheets in Excel as part of your school or as part of work? How many of you use Excel or spreadsheets a lot in your, I'm looking for thumbs, hands, I'm looking to see if, I see some, all right, I see some thumbs going up, some hands and thumbs going up. Excellent. So some of you do, I'm sure you do, no surprise. I'm going to show you, today I'm going to show you some really great new tips and skills that I think you're going to like in Excel and in spreadsheets to help you work more quickly, more efficiently. But let's jump in and let me talk quickly about, as you heard, I am the executive director of the Financial Modeling Institute, FMI. You can think of us, FMI. FMI is the only, FMI is the world's only financial modeling accreditation organization. So we run rigorous testing and accreditation programs in financial modeling to make sure people are truly excellent financial modelers. You can think of us like CFA Institute, except our exams are focused on financial modeling exams where people actually have to build up financial model during the exam. So that's what I'm doing now. We have a whole team, including David, who's on the team. But my whole career has been in financial modeling. I was an investment banker for a number of years. When I started my career, I started a training company called the Marquee Group, and we taught financial modeling all over the world. I sold that business 2 years ago. And I also created, I was very honored, I created the practical skills module. I created the practical skills module that is now a mandatory part of the CFA program. Is anyone in the CFA program right now? Do we have any candidates? Raise your hand. I'm looking at you. I'm looking over at all of you right now. Do me a favor, raise your hand or your thumb if you are currently enrolled in the CFA program. Do we have any candidates right now? Looks like just a couple. Okay, a couple. So if you are a candidate right now, you will know that as part of your CFA journey, you have to do a practical module as part of the CFA program. If you choose to do the financial modeling one, that's with me. That I created. Going to ask if people can just try. We're in a meeting here, and not a webinar. So if you can please try and keep your Zoom on mute, that would be helpful. Thank you. But we can also mute you on this end. And I teach at Queen. So my whole career has been focused on financial modeling and helping people become excellent financial modelers. And very, very briefly, FMI, a whole bunch of us started FMI around almost 10 years ago. As the world's only accreditation organization in financial modeling. We have a curriculum, we have learning materials, we have video tutorials, but then what happens is people register to sit a challenging exam. The first level exam is the AFM, where you have to build up a full financial model of a company from scratch, not multiple choice. You're in Excel building a model for 4 hours. It's proctored so we can see what you're doing, and we get a full recording. So anyone who has the AFM is truly an outstanding financial modeler. For our upcoming exam in October, we have an exam this in 2 weeks in October. We have more than 1,000 people sitting the exam in 100 countries all over the world. So it's exciting. A lot of people are doing it everywhere, and we have a great partnership with the CFA Institute and with CFA Society Indonesia, and we would love to tell you about that. If you're interested, let us know and we can chat more about it later. But what I really want to do here today is talk about some ideas around financial modeling, some best practices, and an introduction. So I'm going to move over now into Excel because I'm going to spend the rest of my time in Excel looking at some notes. We're going to be looking at a model here today. I'm going to be showing you a financial model. This is a financial model called the Henderson Manufacturing Model. We're going to look at this model together. But I'd like to start by showing you some notes. And I'm going to take a bunch of notes on my screen and talk a little bit about financial modeling. So I'm looking over at you again. I'm looking over at everybody. Who here has ever built a financial model? And I haven't even said what that is or what it means, but raise your hand, please, if you have ever built, or if you think you've built a financial model, please raise your hand. I'd love to know. Has anyone here built a financial model? I don't see any hands going up. Just a couple. Okay. Well, let's talk a little bit about financial modeling. I understand some of you are in school, some of you are students, which is great. So you might start building some models, and in your future, you might be building models. It's a very, very important concept, knowing how to build financial models. So let's talk about, this is what I wanted to cover with you during our webinar. We're going to talk today about ideas around model flow, around model assumptions, about managing scenarios in a model. And then I will try to end with a couple of ideas in modeling. They're called repeat and link, and build it and link it. So I want to show you a bunch of really important modeling ideas here today. But let's start, and I want to ask you, what is a financial model? Because I ask people all the time, whenever I'm running programs, I always ask people, what is a financial model? And I'm going to ask you to help me out in just a moment. But here's what I would like you to think. If someone ever says to you, if someone ever asks you, what is a financial model? Or they tell you that they need you to build a financial model, if you're not sure what it means, it's pretty simple, actually. What it means is just a forecast. In the world of finance, when someone talks about a financial model, usually what we're talking about is a forecast. Building a forecast of a company's financial statements. That's it. That's it. All we're doing is building a forecast into the future. By the way, if any of you have ever done any budgeting work or forecasting work, how far into the future do people typically forecast? Can you type something in the chat? What have you seen before? What's normal? What's common? If you're going to do a forecast or a budget, how far into the future have you seen people do forecasts? Right? Fung says 5 years. Great. Right? Vitari, 5 to 10, 5. Great. I love it. 3 to 5. Danny, right? Good. 5 to Erwin says 5. Jeffrey, 3. Yeah, very good. Catherine, right? So what I'm seeing, hopefully everyone is seeing this, but you are correct. The most common people typically forecast 5 to 10 years is the most common range. We call it the model's periodicity, but sometimes longer. Sometimes people are building models for infrastructure projects or for mining or oil and gas, and they will forecast longer. So some models can be longer, sometimes shorter. But the bigger question is why? Why are we forecasting? So let me back up. If you ever now hear someone talk about a financial model, all it means is a forecast. We're just forecasting a company into the future. Sometimes 3 years, 5 years, 10 years, but we're forecasting in the future. The bigger question is why? Why are we building models? And I will tell you, if you want to see my screen, the reason people build models. Yeah, well, Erwin, you're saying for valuation. Let's get back to you in a second, Erwin, but even higher level than that. I would say the only reason people build models is because models have become the most important decision-making tools in finance. Models are the most important tool used to make so many financial decisions. Now, Erwin, you said for valuation, that's one of the reasons, but there are lots of types of decisions. I told you that models are used to make decisions, but there are so many decisions we make. So can you guys go to the chat, please? What types of decisions are people making from their financial models? When people build financial models, will they make evaluations, right? Tao Fan says investment decisions. Excellent. Who else wants to put something in there? Yeah, great. Like it. Pricing decisions. I love it. Fung says entering new businesses. I love it. Feasibility, right? Bima says M&A. Pricing. I love it. Acquisition, right, Regina? Good. So many decisions are built off models. You guys are all exactly right. Look at this. I'll show you a list. So what types of decisions? Nobody mentioned credit, but we often build models to make credit decisions. We build models to make investment decisions, right? Abdul says many purposes. You're right, Abdul. Many purposes. I'm going to put some of them on the board. Investment decisions, credit decisions, research forecasts. People who are doing research build models to make pricing target decisions, valuation decisions, M&A, you mentioned, leverage buyouts, LBO, operational decisions around headcount, marketing, budgeting, sensitivity, risk management, and there's even more. But people are using their models, right? Dividend payout, of course, capital structure decisions. There are so many. These are examples of some of the decisions people are making with their models. And that's why modeling is so important. That's why everyone needs to understand modeling, because almost every major decision these days is based off a financial model. But there's a problem. There's a big problem here. And the problem is this. The problem is that so many financial models that people make are a mess. They're terrible. They don't work very well. They're messy. They have errors in them. And as a result, they're often filled with errors, hard to understand. And as a result, it makes it very difficult to make good decisions. If the model is wrong, if the model has mistakes, it's very hard to make a good decision. Has anybody here, I'm going to ask you a question. Has anyone here, can you raise your hand? Has anyone here ever opened up an Excel spreadsheet and you saw a formula so big, so long that it was going around and around and around and you didn't understand it? Has anyone ever seen a formula in a spreadsheet that was so long, so crazy that you really did not understand it, right? Zaxur, right? Irwin said you've seen that. Who else? Who else, right? Vincent. That's very common. It's not a good thing. It's terrible, but it happens all the time, right? Yes, Brian, you've seen that. It's very, very common. It's not optimal. It's not optimal. It's because people don't understand modeling discipline when they do that. So I will tell you, me and my first formula thesis, exactly, right? Exactly. It is what people do because you don't know. No one showed you a better way. No one showed you a clean way. You just do it, and then you realize after, you realize afterwards, that's really a crazy formula, and it's hard to understand. By the way, if you ever are looking at a spreadsheet, how do you know if a spreadsheet is working well? I will tell you that every good model, every good spreadsheet needs to work in two different ways. Every good financial model has to work in two different ways. So first of all, if you're checking a model or you're looking at a model, how do you know if it's working well? Well, a good financial model has to work well electronically. That means that every single formula has to make sense. When you are going through the model and clicking, every formula has to be clean and make sense so somebody can understand it. So number one, a good model has to work electronically, but also a good financial model has to work on paper. It has to work on paper or as a PDF. It needs to feel like a presentation because we are going to present the model to a client, to a boss. So your model has to work well on paper. And I am going to show you now in just a moment the model we're going to look at again today. And I'm going to actually just give me 1 second. I want to open up something here because I want to show you exactly what I am talking about. A good model has to work very, very well electronically and on paper. And so if you see my screen here, you can see my screen. So first of all, here is the model. Again, this is the model. This is the Henderson model. I'm going to show it to you. This, by the way, is exactly the type of model that people have to build from scratch. If anybody who sits the AFM exam, the AFM, I told you, is our first accreditation. You need to be able to build a model like this with a cover page and a nice executive summary and an assumption page and scenarios. The scenarios allow you to run a base case in your model, a best case, a worst case. You have to know how to build this. And you need to know how to build up the entire model from scratch. So the revenue calculations, you need to know how to build up the costs, the income statement. So this is the exam. How do you build up? So anyone can do this, is really very confident and very powerful. They can build up a model like this from scratch. The income statement, the cash flow statement, the balance sheet, etc. So this is a financial model. I hope you feel like when I show you this model, as you look at this model, I hope you feel like it looks professional. I hope you feel like it looks organized and neat and clean, right? The financial statements I showed you. So I hope you feel like it seems like a logical model. This is how it would look like electronically in your Excel. And if you looked at the formulas, you would see the formulas are simple. The formulas are easy to understand. They're easy to follow along. So simple formulas in a clean model. But I also told you that a good model has to work well on paper. It has to feel like a presentation. Watch this. I'm going to show you the model again. I'm going to show you the model again, but this time not in Excel. I'm going to show you the model as a PDF document. Look what I did. I went into PDF. Here's my presentation, and here is the model. I was able to print this model as a PDF, and you can see here, look, it's 15 pages, 1-5, and let's go look at it. If you were to print this model, there's a cover page. You can see a cover. There is an executive summary, and if you printed it out, it would look nice. You can read it. There's an executive summary. There is an assumption page and more assumptions and scenarios. Do you see this? Watch as I go down. As I go down the revenue schedule, you have a title on every page. I have a subtitle. I have lines. If I go down, every page looks and feels the same. It feels like a presentation, the income statement, the cash flow statement, the balance sheet. And that's the point. A good model must work well as a spreadsheet, but also on paper. That creates so much confidence, and yet people don't know how to do that. And what I'm really saying is a good model has to be a powerful communication tool. It has to tell a story. It has to tell a story to your audience, to your boss, your colleagues, and if it does, you will really impress them. By the way, nobody thinks about this, but I will tell you that modeling is an excellent leadership development tool. If you really want to become a strong leader in your company or in your organization, become really good at financial modeling. Anybody who becomes good at modeling, it's a strong leadership development tool, because as a modeler, you have to know how to understand a business. You have to know how to research the business. You have to know how to pull it all together, how to build it, how to communicate it. When you can do that, people are very impressed and they will want you doing more and more within the organization. So that is what I wanted you to see so far. I want you to understand that modeling is not just a terrible, messy calculator. A model has to be a beautiful, well-designed spreadsheet tool that you can use electronically or on paper. But it doesn't happen by accident. Models only work well if they're well planned. And I will tell you that someone who builds models, a good financial modeler really spends no more than 50% of their time in Excel. The rest of their time is spent researching, talking to people, designing, planning the model in order to make sure it works well. So it's really important to plan out the model. And I have some slides in the deck on planning, which you will see. It is very, very important to plan the model because a model has to have optimal flow. How many of you, can you raise your hands? How many of you have made a PowerPoint presentation in the last year? How many of you, raise your hands? How many of you had to build a PowerPoint for something, anything? How many of you had to do some slides? I see some hands going up, right? Zaxer, Erwin. Who else? I see a bunch of thumbs going up. Great. Many people have to build a document, right? Or a slide. Well, you obviously know that if you're building a slide deck, you have to present it in the right order. It has to flow. It has to tell a story. What's the first thing? Can you guys go to the chat? Can someone please write in the chat? What's the very first thing in any presentation that you'll ever make in your life? What are some of the things you have to put right up front? What do you put right? Title page? Good, Erwin. I love it. Obviously, if you build a presentation, you have to have a title page, just like I did in my model. I love it. Guntur said an executive summary. I love it. So Erwin said you need a title, an executive summary, right? Would you agree? Every time you make a PowerPoint, right, and I love it. You've got, Adityo says the background, an introduction, right? The background of the problem you're trying to solve, a framework. I love it. I love it. This is what makes a good presentation. And the same thing needs to happen in a model. You need to think of your model as a presentation, right? I'll write that again. You have to think of a model as a powerful communication tool, a presentation tool. That is going to allow you to become an excellent modeler. So I just showed you our model a few minutes ago. So what was in it? Well, what is optimal flow? Just like in a PowerPoint presentation, a financial model should start with a cover page because the cover page sets the stage and it makes the model feel like a presentation. It is so, so important. It only takes 5 minutes, but it's very important. Number two, it is so, just like you all told me a minute ago, it is so important for a good model to have an executive summary. Many models do not, but it's very important because you need to tell people what is the answer. What is the answer? It sets the stage. It provides the answer. You can use charts. You can use graphs. You have to customize it, but it sets the stage. And we need to show the assumptions, right? So again, if you look at our model, if you look at my model for 1 second here, right? I have a cover page. I have an executive summary. When do you build this page, though? The executive summary you build last. You build this page at the very end. You cannot build it until the end, but you have to have a summary, and then we have to have assumptions. All the assumptions in the model have to, look what I have here, guys. I have the general assumptions. I have some equity assumptions, some operations assumptions, tax assumptions. These are the interest assumptions, the cost assumptions. The point is, all of the assumptions are up front. It is so important because it tells the reader, how did you get there? What decisions did you make to build this model? What decisions, what assumptions did you make? And by the way, what you might have seen, a very, very common convention in a model is that calculations are black and that inputs are blue. This is a very, very common modeling convention that a formula should be black and a input cell should be blue. So if you see here in my model, right, if you look back at the model for 1 second on the assumption page, all of these numbers are blue because they're inputs. Somebody typed them in. And that is very important because it helps you understand which cells in the model are been entered as data inputs and which ones are formulas. You can see when I have a formula, the formulas are black because that's what we do with calculations. So that is very, very important to understand. So a good model should have a cover, a summary, and then the assumption page. And then next, it's important to have scenarios. And I'm going to show you that. We need to know how to manage uncertainty in a model. And I'm going to show you, if you're ready, I'm going to show you a couple of excellent Excel skills in just a moment. And finally, in a model, there is the calculations. All of the calculations, I call this the engine. All the calculations and the financial statements. You don't have to go here very often, but all the calculations are there. If you understand how to build a model using optimal flow, your models will be beautiful. They will tell a story and they will allow you to make really good decisions. Okay. Any comments, questions so far, right? It is great that you're all here and there's been good participation. So hopefully now you understand that what a model needs to do, and I hope that you have a good feeling for what a model should look like, right? How should a model be presented? How should it look? How should it feel? And again, when I'm in the model, you can see here, I told you it's a forecast. So really, the model is all about the 5 years that we're forecasting into the future, right? That's what I'm trying to do. Forecast the next 5 years because that's what we're going to use to help make really important decisions. So let's talk about two things. I'm going to show you a really nice Excel skill, and then I'm going to show you how to manage your scenarios. We're going to talk about managing risk. So keeping the assumptions up front, it's very important. As I just told you, it is very, very important to keep the assumptions up front in the model because people want to know what the inputs are before they look at the calculations. So here's a great tool. I'm going to show you a really nice Excel skill that allows you to keep your assumptions up front, but to see your calculations. Let's go into the model, okay? Let's go into the model. So here's my model. Does everyone see this? Here's the model. So I want to show you a really nice Excel skill now that maybe you haven't seen before, but I hope you use it in your work. And then for the second half of the webinar, I'm going to show you a few more really nice Excel skills as we work through it. Okay. So you now know in my model that I have the assumptions up front, right? You all know that I have assumptions up front. These are all the inputs. And then my model is here. And this is where all the calculations are. Let's look at the income statement, okay? Does everybody see on the income statement, we have revenues and I have EBITDA and I have net income and I have all the earnings, okay? And I can see here that the EBITDA is supposed to be 73, right? You can see the forecasted items, fine. But here's what always happens. What always happens in a model is your boss is going to ask you to make a change. So let's pretend your boss said, hey, the raw material, does everyone see the raw material cost? I have it as 226. What if your boss said, you know what? I don't think that's going to be 226. I think the raw material is going to be 250. I'm going to type in 250. And now I put in 250 as the raw material cost. So what should happen to the earnings? Well, the earnings should go down, right? Earnings went down because the cost went up. But what are the earnings? I don't know. If I want to see what happened to the earnings, I have to go over and I have to go over and I can look and I can see, yeah, okay, the EBITDA went down, net income went down. But I have to go back. I'm always, look, I'm going to jump to the model. I'm going to jump back. What if I want to see what happens if it's 210? What if the raw material is only 210? Well, I'm always going to jump back and forth, and I have to go back and forth. And it can be very frustrating to always jump back and forth. So what I want to show you is a very, very powerful tool to allow you to play with your assumptions and see what is happening in your model. It is called Excel's watch window tool. It lives under here. It lives under the formula menu. You see this formula? And there's a button called watch window. If you've never used it, it's really powerful, and I hope you try it afterwards. Let me show it to you. It's formula, watch window, or you can click Alt MW. Watch. I'm going to say Alt and then M is the letter for formulas, Alt M, and then watch window has a W. So let's go do it. I'm going to go to the model. Does everyone see this? I'm in the model, and I'm going to say Alt. I'm going to press Alt M and then the letter W here, and look what happens when I open up. I get the watch window box, and you see it's empty. But it wants to know what should we put in the box. I'm going to say add watch. Does everyone see this? Add watch. And it says what do you want to watch? Let's go to the model sheet and let's watch a few years of the EBITDA. So I've typed in 3 years of EBITDA. I'm going to click add. Okay, add. So now my EBITDAs are inside the watch window on the same sheet as me. Let's add another one. I'm going to click add watch, and I'm going to go to the model sheet, and I am going to add a second watch. I'm going to add net income. I'm going to watch 3 years of net income here and click add again, and look at this. So now in my watch window, I have 3 years of EBITDA and 3 years of net income. And of course, the beautiful thing is, does everyone see this? If I change my raw material to 250 and I press enter, please watch inside the watch window, everything changes. So it's very powerful because now you can play with your assumptions at the beginning of your model and you can see what's happening in the formulas way down deep inside the model. Very powerful. Who's going to try this? Let me know. Raise your hand or go to the chat. Let me know who is going to try this in your own Excel spreadsheets. I really hope that you do. Raise your hand or your thumb if you're going to use this feature. It is yeah, I see a bunch of thumbs going up. Great. It's a very powerful tool. I really hope you use it. Again, watch, if I made the raw material 200 and pressed enter, you can see all of the numbers have changed. It is really important in any spreadsheet to be able to play with an input and see what that is going to do to the outputs. And I really hope that you use this. This can work in any Excel spreadsheet you ever build. If you have any questions, let me know about it. But I wanted you to see it because in financial models, it's a very powerful tool to use. Okay. If no questions on that, let me move on then to the last major topic that I want to review with you here, and that's this. If I go back to my notes here for a second, the next major thing I want to talk about is in a modeling, we have to know how to manage uncertainty. I told you that we're building a forecast. All models need to deal with uncertainty. Can I ask you to please go to the chat and help me out? I'd like you to go to the chat for a second. If you were building a forecast model, let's pretend you were building a forecast model of a company, any company. What sorts of assumptions are hard to forecast? What sorts of variables are uncertain? Can you tell me what types of variables in a model are very difficult to predict, very difficult to forecast because they're uncertain? Yeah, so Erwin is saying growth. I love it. of course, growth rates, very hard to predict growth rates, right, Erwin? I don't know. Well, earnings. So Neural, you're saying earnings. Earnings are the output. Earnings are the output calculation based on inputs. What I want to know is what inputs, what assumptions are hard to forecast, but they can have a big impact. So Neural, they can have a big impact on your earnings. So Erwin said growth, currency. I love that, right? Aditya, right? Good job. You said currency rates. I love it. Exchange rates for sure. Market assumptions. Yeah, Bima, different market assumptions. Raw material prices, sales volumes, inflation, supply and demand. Excellent. These variables are very hard to forecast. I don't know what they will be for the next 5 years. Very good. Neural. Yeah, that's a great one, Neural. Raw material prices. I don't know exactly what the raw material price will be. It could change, right? Could go up, could go down. And so what I will tell you is this. Guys, can you see my screen? When you're building a forecast, some assumptions are very easy to forecast because they don't change much. Some assumptions don't change much they're easy to forecast. So an example might be the tax rate or interest rate if it's fixed rate debt. Some assumptions don't change much. They're easy to forecast. But some assumptions are very hard to forecast. They can change a lot, like the ones you said, economic variables, exchange rates, commodity prices. They can move up and down a lot. Inflation, revenue growth, some of the things you guys mentioned. So what I will tell you is for these variables, we want to have multiple options. When you have variables that are hard to forecast, it's really important to have multiple. Spell that it's very important to have multiple cases. So for the variables that are hard to forecast, I would like to put a base case, a best case, and a worst case in the model. So I will tell you that every model that you ever see in your life, every model you ever build should have a scenario page where you can capture these difficult variables. And we call them the key drivers, okay? We call these the key drivers. The key drivers are the variables that are hard to forecast and hard to control. And Arjun is asking if it's possible to have a copy. Yes, after the webinar, I will send you my notes. I'm going to send out my notes, Arjun, that I'm taking, and I'm going to send you this. You'll get a copy of the model if you want to see it. Right? So I will send this out to the CFA Society, the model, and my notes file as well. Okay. But I'm just telling you now, every model you ever build should have a scenario page where you can run a base case, a best case, and a worst case for the variables that are hard to forecast. And there are 3 steps. There are 3 steps to building a scenario page. Let me show you the scenario page here. Oops. Let me show you the scenario. So do you notice in my model, I have a scenario page? And here it is. This is the page called the economic and pricing scenarios. And you'll notice that I have a base case, a best case, and a worst case. And look at this. There's a switch. I'm going to show you how to build this. There's a switch. It allows me to run the base case. Or what if I do this? What if I say run the best case? You can see this. Now the model is using the best case. Or if I say worst case, now the model is using the worst case. So it's very powerful to take variables like cost inflation or sales prices or sales volumes and to have multiple cases, a base case, a best case, and a worst case, because I don't know exactly what these variables will be into the future. And what I want you to see is this. There are 3 steps to build a scenario page. I'm going to show this to you, and that's going to get us to the end of what I want to show you. The first thing you need to do is enter the assumptions, and I'm going to build one for you. I'm going to build one up for you in just a moment. First, you have to enter your assumptions. Then we need to enter a 1 as a switch, and just stay with me. I'm going to build it. So first you have to enter your assumptions. Then you need to enter the number 1 as a switch. And then finally, we're going to use a Excel formula to control the live case, okay? So let's go do it here together. So I'm going to move my switch out of the way. So does everyone see here? Does everybody see that in my scenario page, right? In my scenario page, I have 3 different variables: cost inflation, sales price, and sales volume. And I told you that there was base, best, and worst. Did you notice that every variable has a box, a rectangle that has 3 rows, right? This is a rectangle that has 3 rows for my inflation. Here's a rectangle with 3 rows for sales prices and another one with sales volume? Well, what I will tell you is this is always step one. Step one is always to enter the assumption. So this is step one, and these numbers are blue, which means these are assumptions. These are the assumption values for the base case, for the best case, for the worst case. How do you determine? How do you determine what should be the base case inflation, the best case, the worst case? Do research. Ask your client, your boss, right? How do you decide what should be the base case, the best case, the worst case? You have to do your research. You have to talk to people. You have to find research reports. You have to look at what other professionals are thinking. And then you show your boss and your client, and you decide what you think the most likely base case is, the best case, and the worst case. So that is step one. You build the large rectangle. Step number two is to enter this number one into a cell. Now I see a question here. When creating a scenario analysis, what are the benchmark figures used as the basis? Got it. Is there any rule of thumb for how much the values should differ across scenarios? Yeah, that's an excellent question. I love that question. I'm not sure if it came to me or to everyone. Hopefully everyone sees it. But Fitriani said, when creating a scenario analysis, are there any rules of thumb? How do you get the benchmark? And honestly, it's funny. I've worked with hundreds of companies and lots of clients. I'm not sure that I can share with you a general rule of thumb, but what I will tell you is that what everybody likes to do, everybody likes the base case to be the case that they think. I mean, I know this probably sounds obvious, but everybody likes the base case to be the case that they think is the most likely case. How do they decide that? I don't know. They talk to their teams, they talk to the boss, they do their research. But usually for the base case, people try to find something that is probably the most realistic for every variable. And then you're asking about rule of thumb over how much should the values differ? Because what you're noticing is, for me, my base case, best case, and worst case, they're not that different, right? The base case is 2% for inflation. Best case is just a little bit lower. Worst case is a bit higher. Maybe it could have been, maybe the best case could have been 0, 0, 0. And the worst case could have been 6%. Again, it comes down to credibility. It comes down to showing this to your client or your boss and having them feel like it seems reasonable. Now, it's often nice to build, but you could have more. You don't need to have 3. You could have a super worst case that gets really bad. Really, this is I love the question, right, Vitriani? It's a conversation with your boss, your team. What do you think is most likely? And then if it's going to be a little better, what's possible? If it's going to be worse, and you just have to agree as a group what you think it will be. So what I told you is step one is to enter your inputs here. Step number 2 is to have a numeric value for the switch. Do you see this? So this is just number 1. This is my scenario switch. It has a number 1 in the switch. And that's it. It's just I just typed it in. I just literally typed it in. And the final thing to put in is the skinny row. So I told you in my notes that we always need to have a skinny row up top. And this is a formula in Excel. So this row here is the live case running. This one is the live case actually running in the model. So the model right now is running. Do you see this? This is the base case, and it's the same as the base case. So the base case assumption is now going up into this row. And if I was to change my switch to a 2, watch this. If I make this a 2, now you can see that the live case is using the best case. So the best case now is running in the model. The model is the one running this one in the skinny row, okay? So that's what's going on there. So now what do we do? So how do I build the skinny row here? This is important. So the live case needs a formula. And very commonly, People use an if statement, okay? Very commonly, what people do is in the skinny row here, people often use an if function in Excel, which works, but it's not optimal. Let me build it here together. I'm going to say equals if. How many of you have used if statements? Raise your hands. How many of you have used if formulas, if statements in Excel spreadsheets before? Raise your thumb, raise your hand. If you, right, Vincent has. Who else has used ifs? Good, right? Daifan, good. Who else has used ifs? I'm sure many of you have. If statements are okay, but they can get very long. They get very long. Watch this. So what would the if statement have to do? It would have to say, well, if this cell, if this is my switch. So if that cell is equal to a 1, then grab this one, the base case. But now I need another if. I need another one to say, otherwise, if this switch is equal to a 2, then go lift up the best case. And otherwise, go get the worst case, right? So do you see what's happening? It says if it's a 1, get the base. Otherwise, if it's a 2, get the best. This is what we call a nested if statement. And it's working. It works, but they get very long. They can get very long if you wrap around with many if statements over and over. So it's okay, but it's not my favorite because they get long. I prefer to use a very powerful feature in Excel, which is the choose function. So one of my favorite features in Excel is the choose function, and I'm going to show you how to build that one instead. The choose function is so simple, and I really hope all of you use it after this. The choose function simply says, where's your switch? Look at that. Where is your switch? Now I'm going to lock it. I never want that cell to move, so I put dollar signs. But the choose function just says, where is your switch? And then where are the choices? Where are the various choices? That's it. Where's the switch? And then where are the various choices? Very simple. That's it. Where's the switch? Where's the choices? And look now, would you agree? This if statement starts to get long. And if I added more and more, if I added 4 or another case, the if statement's going to get longer and longer. But with the choose, it's so simple. You just say, where's the switch? And then where you just click on the various options. And what happens is if there's a 1 here, if your switch has a 1 in it, it will lift up the next item. It'll pull up H14. It'll pick up the first one. If this cell has a 2, if the switch has a 2, it will take the second item. It has to do with the order that you type them into this formula. So if there's a 1, it takes the first. If there's a 2, the second, and a 3, the third. It is so simple, and I love it because everyone understands it. It's so clean, it's so simple, and you can build it in any model you ever use. Who's going to try a choose function? Let me know. Raise your thumb. Who here is going to try using a choose function after this webinar? I really hope you use choose functions. Raise your hand, raise your thumb. Good. Look, I want to see some thumbs go up. Great, Erwin, and a bunch of other people. Great. A bunch of thumbs. I hope you do. Now you have to, right? Bima said yes. Good. Right? Lin Tang, now you got to do it. Now you have to because you said you would do it, right? Good. So I hope you do. It's a really simple, powerful tool. But the last thing I want to show you now is this. So as you've heard me say, every financial model you ever build, every spreadsheet you ever build should have cases, a base case, a best case, and a worst case, because that way you can run multiple choices. But then to do that, you have to enter your different cases. You have to have a skinny row. The skinny row shows you the one that's running, and then you put a number 1 in as the switch. And that is going to allow you to run it. So again, 1, if I put a 2, you can see now the choose function. If I put a 2, the choose function is taking the best. And if I put a 3, the choose function is now lifting up the worst. Great. Perfect. But the problem is this. I don't want anyone to see this number. I don't want anyone to ever look at that number. I don't want anyone to see this numeric value in my cell here. Why not? What's the problem? Can you go, what's the problem with that number? Right? I'm going to share with you, we like to build a switch to control it, right? I do not want my boss or my client to see this number 1 because it doesn't mean anything, right? This number does not mean anything. It's confusing by itself. What I want my boss to do is have this. I want my boss to play with a little drop down where it says base, best, worst. I do not want my boss to see this number 1. As a reminder, remember I showed you the model earlier on paper? Look, This is what it would look like on paper. They would see the scenario page, and then they would see there's a little drop down. So they know that this is a switch. And if they go here, if they went here in Excel, they would see a little switch that they can play with. It's very powerful. That's what we're trying to do. And so I do not want anyone to see my number 1 because it does not mean anything. So I want to build a control box to control it. I'm going to show you how to do it, and then we'll take some questions and see where you're at. And so we like to build a switch. I want to build some sort of a control mechanism to control the scenarios because I don't want anyone to see that number 1, 2, 3. Now it's found on the developer menu. So do you see here? I need to show this to you. It is found on the developer menu, but you might not have the developer menu because by default, this is off. So I want to show you how to turn it on. I want to show you how to turn on the developer menu. So what you need to do is you need to go to the File menu, Options, Customize Ribbon. Okay, File, Options, Customize Ribbon. Let me show it to you. You go File, look at my screen, and then down here, File, and then down to the bottom, Options. And then you're going to say Customize the ribbon. Customize the ribbon, and on the right hand side all the different ribbons are available, and you're probably going to see that on your screen. The developer is probably off, so you have to turn it on only once ever, and then when you turn it on you will see a new menu here that says developer. So now let me show you how it works before we wrap up. So what do? I click on the developer menu, and then I'm going to click Insert. So just watch this, Developer, and I'm going to click Insert, and then I have the form controls. Everybody see that? Developer, Insert, Form Controls, and I'm going to click on the second one here that says Combo Box. Do you see this? The second one says Combo Box, and now it wants me to draw one. So I'm going to hold down my mouse, and I'm going to draw one. Look, I drew for you I drew a huge combo box, much too big, but I just drew it. So you just draw it on the screen. And then what do? You go to your new dropdown and you right click and you say, let's format the control. Okay. I'll do it a second time. I'll do it one more time after. So again, you right click and you say format the control, and it wants to know 2 things. It wants to know where's the input range and where's the cell link. Where's the input range? Where's the cell link? The input range is the range of words that you want to see, and the cell link is the actual switch. That's it. So I'm going to cancel out this. So again, what do? Let me do it one more time. You go to your new developer menu and you click Insert, and then you click on the combo box. And from there, you draw one. Okay, you draw one, and I'm going to right click and I'm going to say format this control. And it wants to know here when I get here, where's the input range? That's the range of words that you want to see. And the cell link means where is the actual switch. And when I click OK, watch what happens. When I click OK, first, it puts a 0 here. That's okay. All you have to do is open it up. And when you open it, you can click on base case. You can click on best case. You can click on worst case. And what it's doing, and I have 2 of them, so I'll delete this one. I'll use this one. So so I can just open it up. And when I click base, what it does is it puts a 1 in this cell. It enters a number 1 in my switch. If I click on best, it puts a 2 in there. And when I click on worst, it puts the number 3 in there. And so that is all that it is doing. And your choose function is looking at that number. And the last thing you'll do is you'll go back. You'll make it much smaller. You'll resize it, make it smaller, and you will move it and cover this up. So now look at that. Look how powerful that is. Look how nice and powerful. Now when your boss opens up the model, they'll think, wow, this is amazing. They can click, they can play with the base case, they can run the best case, they can play with the worst case. It's very elegant. It's very user-friendly. This is what it takes to build a powerful financial model. So I wanted to stop there now. I wanted you to see that. I'll see if there's any questions. But again, what I hope that you kind of taken away from today is that a model is much more than just a spreadsheet. It's much more than just a terrible calculator. It has to flow. It has to work well electronically. It has to work well on paper. It has to tell a story. And I showed you, we talked a bit about flow. Think of your model like a presentation. Keep your calculations black, your inputs blue. And I showed you how to use the watch window to test your model. And then I showed you how to build a beautiful scenario page. If you can do that, you're going to be really off to the races and doing a great job with your model. So we've got a few minutes here. If people have any questions, Ramad, I wanted to turn it back to you and see if there's any questions. Everybody's still here. That's amazing. So hopefully everyone's got some new ideas and hopefully everyone has some new thoughts. But yeah, Ramad, did you have any comments before we take questions?
If you can show the foundation modeling course, the program, that would be great.
Sure.
This is the research challenge participants get this on complimentary basis.
Absolutely. So if you look at FMI, FMI is an accreditation body, and we have 3 different accreditation levels with challenging exams, AFM, CFM, and then we have our master financial modeler level. But we also developed a foundations program. This is for people brand new to financial modeling, or usually we use this in a lot of universities for students. We're making this available to the CFA participants in the research challenge, and we're giving this for anybody part of the CFA Society, anyone who's part of the CFA Research Challenge and part of the society will get access to our Foundations program for free. The Foundations program has exactly the same learning videos, and I will show it to you in our community. Oh, no, sorry, it's not. I will show it to you here. The Foundations program has learning videos with me. So it's about 10 hours of videos. And in those videos, I am showing you step by step in the videos how to build up a beautiful, best-in-class financial model. It's exactly what you're going to need to do in the research challenge. So anybody who will get access to it if you're in the research challenge, but there's no exam. So the difference between the foundations program is you can learn all about modeling, but it's just a nice multiple choice test at the end. So it's not a challenging exam. The AFM program, in the AFM program, you have to actually know how to build the model from scratch. So we don't require that with research challenge participants. But if you're interested in learning modeling and you'll get all the same learning materials with me. And that's what we're doing. So Ramat, that's the program, and anyone going through it will really learn how to build a beautiful model just like this one. There's a question here. Oh, and Dave, thank you, David. My colleague David has put in some more information about foundations. Let's see here. Zawa said, sometimes companies have many items on their balance sheet, and in financial modeling, should we summarize those items to be more compact? It's a great question. Zawa said some companies, I love it. It's a great question. Zawa said some companies have many, many, many line items on their balance sheet. In the model, do you need to show all of them, or can you condense some of them into a more summary format? I will tell you, Zawa, that the balance sheet I'm showing you here is pretty standard. This is, I would say, a standard level of detail where we've got the current assets, the long-term assets, current liabilities, long-term liabilities, and then the equities. And you're right. Some companies do. You're absolutely right. Some companies have a lot more lines. Can you combine them? The answer is it depends. If you're building the model for the company and the CFO wants the model to look exactly like the historicals, then the answer will be no. You'll have to model every single line item, but you'll have to ask your client what they need. If you're just doing a model, but if you're building a model to do a valuation, then no, then you don't need to have all the lines, and you can condense a lot of the unnecessary items, a lot of the smaller ones. The other thing you can do, though, Zawa, is this. Even if you have many items on the balance sheet, it's very common in financial models. Like, for example, you see I have a row called other. If you have a lot of line items on a balance sheet, Zawa, and you don't know what those mean or what they're for, you can put them if you like, and then what we call flatline. You just make it constant. You can just keep it. So if you have lines and you don't know what they are and they're not that important and you don't care, just keep it constant, and that's fine. So Your decision. But this is the thing. The modeler has to ask the question. Your job is to ask the question to your boss, your client, and say, hey, how much detail do we need to put on the model for the forecast? And so there's no right answer. It depends on the situation, but I like that you asked it. If you're asking it, you're going to come up with a good answer. Edgar says, will I be at a disadvantage if I use Excel in a Mac? Will you be at a disadvantage? Yeah, I hate to break it to you, but the simple answer is yes. You'll be at a small disadvantage if you use Excel in a Mac. You know why? The main reason is that the software works well. The Excel software looks fine in a Mac. The biggest problem is the keyboard. The keyboard is slower on an Apple. It's not as fast. You can't type as fast. And you don't have access to the you don't have access to the keyboard shortcuts like I did here that turn on the letters. So you have to use your mouse much more. So people are usually slower when they work on a Mac and faster on a PC, but it can do the same thing. And by the way, I have met Edgar, I have met many people that are very good at modeling on a Mac, but you just have to practice it. It's a little harder to get faster, but it's okay. You can do it. I mean, you can do it, but a slight disadvantage. Good question. Any other questions here? You guys have great questions. Everybody's still here. It's amazing. I hope that you've learned some new things about what models are, what we're trying to do, the decisions we're trying to make with them, and really why I think you should all think about becoming strong modelers. It will really benefit your career if you can understand how to build how to build a forecast model. Can I tell you one more thing? Modeling is exactly the same everywhere in the world. Again, modeling is exactly the same everywhere in the world. So you can travel, you can get a job in another country, and even if you're based in Indonesia, you can analyze an American company, a Chinese company, an Indian company. It doesn't matter. The financial statements look the same, the model is the same. So when you know how to do this, you can work with any company in the world. It's very powerful. Are there any other questions then before I'm gonna have to hop in a couple minutes to another webinar. My team booked me 4 back to back today, but I started with you guys, and it was great to be here. I hope we can do more. Rama, we have other webinars we do all the time. I just finished a 3-part series for CFA Society Australia and CFA Society UK. We did this one. We did another one on how to check and review models. We did another one on Excel skills needed in models. So we have lots of things. If you want, if your members are interested, we can do more webinars on modeling topics. And maybe I'll even...
maybe David can put your website link so they can access your video there.
Absolutely. We're going to send through all the resources, right? We are going to send you, when the webinar is over, and I'll go back. When the webinar is over, we're going to send you the slides. We're going to send you the model. We're going to send you my notes. David will send you a link if you're interested in learning more. If you're interested in learning more about modeling or the partnership, or with CFA Society India, or Indonesia, sorry, slip of the tongue. If you want to learn more about our partnership with the Indonesia Society, we would love to chat with you about that. We'd love to help you become a better modeler, because anyone who goes through these programs becomes a much better financial modeler, and that's what we want to help you do. Yeah, thank you, David. Why don't you click on that link? David just put a link at the very bottom here. If you click on that link, I'm going to click on it right now as well. You can see on my screen. Do you see this? So this is specifically for our new partnership for the foundations in financial modeling for CFA Society Indonesia. It says welcome students, and this is it's usually $195 US, but we're offering it for free for those who are part of the research challenge. So let us know. But that is what we're doing, and it's been a lot of fun. So if there's any other, there is one more question here that I can take. Hey, Ian. Which assumption variable has the largest sensitivity impact on the project's NPV/IRR for telecoms data center? Aside from the obvious occupancy rate and colocation pricing, is the volatile domestic cost of capital or fluctuation of the foreign exchange rate a more challenging variable to model? So, sir, I love the question, Mohammed. I love the question. I love the way you're thinking about it. I don't know the answer until I look at a model. That's the purpose of the model, right? Modeling, I love it. Modeling is what makes you smart. Modeling is what makes you insightful. The modeling process, the journey of financial modeling is what makes you very smart. Because I love those questions and I agree with you. If I was building a model, I would want to test all of those. You could use the watch window that I showed you. You could use data tables or a sensitivity analysis. I don't know. But you're right. I would want to work with you and figure out what do we think are the most volatile variables. And then I want to understand exactly the magnification of what what the variance is on each of them if we change things. So yeah, I mean, you never really know which is the most sensitive one, and but you're asking which one is more challenging to model. No, there's nothing more challenging to model. Everything is equally challenging to model. Your job is to do your research and figure out reasonable assumptions for an upside case, a downside case, a base case, and you're working with your team, you're talking to people, you're bouncing around ideas, and collectively you'll come up with something. So great question. I will show you one last thing before I hop off, and that's this. I'm just going to show you on my LinkedIn page. If you're on LinkedIn, you're welcome to check out and follow and see what I'm doing. Also, you might be interested. I'm working with two other modelers around the world, and we've started a group called the Mod Squad. We're starting to review and test in a podcast all of the financial modeling AI tools. There's a whole bunch of new AI tools in financial modeling. If you're interested in knowing what's happening in the world of AI and financial modeling, you can follow and see what I'm doing, and you'll be able to watch them. It's all free, but it will help you understand where we are headed with AI and financial modeling. So just a few things to point out. Okay, and last question, I'll take this one, and then I'm going to have to hop off to hello. I'm going to have to hop off to my next one. But how do we know if the model we made is correct? That, Erwin, is a great way to end, because that is the $1 million question. How do you know if it's correct? Well, I mean, ultimately you have to check it, you have to test it, you have to check it and try to make sure there's no mistakes. In the next webinar in my series, I review 5 or 6 or 7 very powerful skills to check models and to make sure that they're correct, because you do not want to have an error, and even one error can have a big impact. So that's a whole separate discussion, but I would say that there's no shortcut. You have to go through and double check and triple check and get someone else to look, but I have a whole sequence of tips. If you Google online, if you just Google and do a search, you might find another video for free somewhere that I did. If you're really anxious to see it, you might find another video of me doing the one on checking. But that is one that I do a lot, and maybe we'll do it here one day. Okay. Anything else then? Ramad, that looks like we've covered a lot of what people have got to say. I don't know if there's anything you want to close or wrap up with then, Ramad, and we can probably wrap things up then now.
Just a thank you, Ian. If you need to go ahead. We will stay a few more minutes with David. I think he can also answer the question. Thanks a lot, Ian. See you in the next time.
Listen, it's been a real honor to be here. I hope to see you even back in person at some point. I'm going to let go. If there's any last questions, let David know. But thank you all. Good luck with your modeling. We'd love to have you join us in our partnership with the CFA Society and to help you in your modeling career and your journey. So feel free to reach out with any questions and we'll be in touch. Take care, everybody.
Okay, yeah. So everyone, if you have any more questions, please unmute yourself, talk to David and myself. For the research challenge participants, we hope that you will access the free complimentary foundational financial modeling to help you with your research challenge. Yeah, go ahead. If anyone have questions, just simply unmute yourself and speak up.
Yeah, and feel free to unmute yourself as well. You can put any question in the chat. More than happy to answer anything as well. Myself, I'm a CFA charter holder, recently passed the AFM designation. And while people are still on, I might as well just say, as you pursue the research challenge, I think it's going to give you a lot of great insights and, more importantly, critical thinking skills. Me, myself, I remember not too long ago, university competitions, research cases and challenges that I've done. And yeah, it's daunting at first. You're given all this information, you need to build a model, you don't necessarily know how. And that's why, Ian was so, thankful to show you a couple tips and tricks. The foundations program is really going to help you learn the skill set you need. And yeah, as you go through it, you're going to learn a lot of different things. You're going to play with different assumptions. You're going to do a lot of research. You're going to use your critical thinking skills. But all that to say is when you go through the challenge itself, take your time, have fun with it. And more importantly, just do your best. It's a learning, it's a journey throughout it all. And yeah, really glad everyone can be a part of it. And of course, if there's any questions related, more than happy to help with anything you need.
Anyone has accessed the foundational financial modeling yet? Okay, maybe you can show your hand.
Yeah, feel free. I know I checked on my end, and I think there were over 70 people that have actually registered for the foundations program. So super excited.
So while you have the expert here, David, you might want to ask question regarding the financial modeling.
Yeah, and what I'll do is also drop the same sort of message as I did before. So the first link really just gives you a program overview of what you can expect as you go through it. And lastly, just the direct access to how you can enroll for free. So I see Erwin here. In making the model, do we need to estimate all three financial statements? The more input we estimate, the more error we'll have. Great question. And especially as you build the model itself, you will need to actually build at least three financial statements, one being the income statement, balance sheet, and cash flow statement, just because they're all interrelated, especially when you work through your assumptions of the more estimates you have. It does open the possibility up for more errors, but I think the key is you're going to build it step by step. So first, you're going to tackle the revenues. You're going to build a revenue schedule with all the assumptions. Then you're going to want to link it back to the income statement. Then once you complete that schedule, you're going to build the costs. And then you're going to build that and link it back to the income statement. So thinking it more of in sequential steps can really help you tackle a financial model and give you a better idea. So Erwin, I hope that answered your question. And going through, I see some others as well too. Yeah, you'll get access to the recording and the slides as well too. And I know we're going to send a follow-up on how everyone can also get access to the foundation program for free. So that's going to be sent right after. And then in making financial modeling, do you typically use only Excel or do you utilize other tools as well? I like this question a lot because there are a lot of different softwares out there for building financial models. What I'll say is Excel is still the king, it's still the go-to. And what I will say about a lot of the different softwares out there, one of the more, I guess, common features and functionalities of those softwares, and one of the most popular buttons that are used still today is export to Excel. Export it as a CSV file, export it as an Excel workbook. So even if you use other softwares, Excel's still going to be king just because it's so simple to use. You can use the files exclusively for what you want in terms of uploading, inputting CSV files. So I don't think you can always run away from Excel, but it's still going to be there. There's a lot of different features, functionalities coming into Excel for plugins. When your research challenge, see if you're allowed to use them. But yeah, I still say Excel is still king to go to for financial modeling. And yeah, it's going to be recorded as well too. So the webinar is going to be available there. We're going to send an email and you'll have access to everything that was discussed here today.
One more question from Regina.
Yeah,
Sometimes we
great
find
question.
several ways in calculating cost of capital. Can you explain the guidance, especially for insurance company?
Yeah, great question. When you look at the cost of capital, you're going to be looking at really the specifics for it. The return on equity, return on debt, but then also the cost of debt and cost of equity. So, a common formula you might run into is the weighted average cost of capital. What I will say about that formula, it's pretty versatile and it can handle a lot of different assumptions into it. When it gets specific for an insurance company, all the work you're going to be doing before is what's going to allow you to calculate the cost of capital. So, for example, if you're going to calculate the cost of debt, specifically for an insurance company, you're going to need to use the metrics in there. So, specific expenses for insurance companies, the industries, you might need to see what specific metrics are involved there, but you're going to be building to the cost of debt. You're going to be building to the cost of equity. And then once you wrap that all up, the weighted average cost of capital is so versatile. You're going to use that to really determine the cost of capital for that structure. Tidbit too, if there are preferred shares, you might need to also calculate that for the cost of capital. But for the most part, the weighted average cost of capital is going to be the way to go.
Okay, David also have to go. One last question, maybe. Simply unmute and speak up.
Yeah, any questions, feel free to unmute yourself or just put it in the chat.
No more question, David. Thank you for putting up the CFA charter there on your wall.
Yeah, thank you. I mean, it was a great journey. I'll speak anecdotally to myself too. Learned a lot, coming right out of university, went for the CFA program. COVID happened, so it changed everything from paper format to online format and really just the way you learn and study. But it was a really fulfilling experience and couldn't be happier with it.
Yeah, for CFA charter holder who is in this webinar, we do offer free complimentary access, but maybe not this year as we already spent our budget on it. But next year we're offering 5 slots. If you're interested in taking the advanced financial modeler certificate, please reach out to me. All right.
Yeah.
Last time, any last questions? All right, David, thank you very much. See you the next time.
Thank you so much, everyone. It was a pleasure having you and enjoy the rest of your evening. Take care.
Thank you,
David.
everyone. Goodbye.
Bye.